Good afternoon. This is Ken Long from Tortoise Capital, and I want to highlight the swing trade of the week. On a day when the market was melting down all around us, I want to show how paying attention to market conditions and managing stops can set you up for some success in shorter-term tactical trading. For those folks who have been following our weekly and daily reports, you know that from as early as September 2014 till about April of 2015 this year, that we've had a downward bias on EWZ, which had been the weakest country symbol in our global world market model. And so we've been taking opportunities throughout that period to reinforce short positions and take short-sided swing trade opportunities. From about April 2015 to July 2015, EWZ was mostly in a sideways choppy market, and swing trading allowed us to get some pieces on the long side and then on the short side during failures, and most recently culminating here around July 20th, which is where I want to zoom in. And I want you to notice that around the 22nd of June or so, when we went short on this most current swing trade, what we'd had was a river that had rolled over. That's the 30-period Bollinger Band, plus or minus 1, and the red line is the midpoint of that. That's the Bollinger Band mean. The river had rolled over. The 90-period regression line had also rolled over. And the 270 regression line, which we consider to be the long-term fair value of a symbol, was consistently pointing downward. And you can see that the dragon, which is this red 10-period Bollinger Band plus or minus a half, which we take to be a noise barrier and an early indicator for changes in the direction of the river, has been pretty much on the south edge of the river for the last 3 months. The most recent short entry occurred here at 31 with a stop at 32.50 when it broke the previous swing low. That's our not later than signal for getting short. This was actually a 5-day down failure, and so there are a number of reasons why this is a nice place to get short. We placed our stop just on the north edge of the dragon, which you can also see here is that dot near the PSAR, which we set at 0.2 and 0.2. So it's an aggressive PSAR. And so we get initial move in our direction. On this little rebound, you notice the 10-period regression line, which is the blue, never comes close to penetrating the dragon. And the north skin of the dragon is never violated. And so we're still in this short all the way down through last Friday. And then the bad news over the weekend and the horrible entry now puts us deep into the money on this position. There was a place to get short a second position here, and aggressive swing traders did that by getting an additional position at 27.55 upon the break of this intermediate swing low. When that fails, that becomes our location to add a second position, and again in this case we would be using a stop on the north edge of the dragon, or if you want to be more conservative, using the Bollinger Band mean. I tend to prefer a tighter stop when we have the second position in. So right now we're in the money from 31, and it's right around 24, so that's about a $7 move on $1.50 of initial risk, which puts us up a little bit over 4-to-1 R, and it looks like more is coming. I'm comfortable having my stop here at 26.50. What I'll be doing is watching intraday on the market to preserve more of this move from 24.50 to 26.50 should there be some kind of rebound tomorrow. It wouldn't hurt my feelings at all if you had your stop right here around 25 and using the south skin of the dragon, or yesterday or today's high. Actually, this is I'm recording this Monday. So if you used a stop up here around 25, that wouldn't offend my sense of propriety, but really not any higher than 26.15 in order to preserve this nice little swing trade. So there are some times when the tactical trade reinforces the direction that we've already taken as a consequence of a respect for the market tides and market condition, and the longer term situation we see ourselves in. So that's everything from Tortoise Capital. This is Ken Long, reminding you to keep your risk measured and your powder dry.